Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, January 18th, 2012 is sponsored by Realtik. All right, let's get right into the mix. Markets having a very solid day. Yesterday we had a solid bounce up, we had a gap up, but the markets faded a majority of the day. It did not look very pretty. In fact, we came right down to this 200 moving average into the end of the day, which was also right around gap fill from Friday of last week, and the markets seemed to get a small bounce into the close. Today we opened flat, and the markets took off with a vengeance, basically on the back of Goldman Sachs earnings, optimism on earnings overall, and optimism on Europe as the dollar continued to fall for the second day in a row. So again, the positives, you have to look at this chart right now and think positive. Why? Well, because again, you had a nice gap up yesterday and then it looked ugly as the market faded. Today you've recaptured that. You actually took out the high, so you made a higher high as well, and the markets again are hovering right around the pivot high from yesterday. Today, ideally, if you want to see more upside in this market, you want to see a close above yesterday's high. Anything above the 130.30 area would be a positive for the markets. Even if we close a little bit lower, it wouldn't be negative, it would just be more neutral. Okay, so make sure you're aware of this. This is very important in terms of seeing where the market goes. Now, if the market continues to rally and we close up in this range, you would expect to move to 132 to 133 on the SPY, which should be mega resistance. All right, but again, very, very impressive move on the markets today as the dollar collapsed back down. One thing I want to show you is on the UUP chart, which is the dollar ETF. This is the intraday chart that's going to be coming up, and you can see 2 days in a row of weak dollar action, which is helping push the markets up. But more than anything, what I wanted to show you was the topping tail from Friday on the UUP. So again, the UUP is the dollar ETF tracking device here, and you can see a clear and simple topping tail last Friday, and the topping tail now playing out. Remember, topping tails are topping signals. And sure enough, the dollar continuing to fall. Now, the big question is, can you break through the 20 moving average on the UUP? If you do, the market should continue up in the short term and head towards this 50 moving average down here. So remember, the dollar trades inverse. So if the dollar's going up, markets go down. If the dollar goes down, markets go up. In this scenario, if you break the 20 and the dollar keeps falling, markets in theory should go up. All right, so that's a nice little move there. 2 days in a row of the dropping dollar. And again, you can see from last Friday, 1, 2 down days, Tuesday, Wednesday, since Monday the markets were closed. Now, a couple other things going on here. Goldman Sachs, as I mentioned, had earnings. Look at this move on Goldman today, up $7. And again, you have to like this chart. I even talked about this chart to the Research Center members last night in the technical analysis video. And by the way, if you want to take a free trial here at InTheMoneyStocks.com, just come here, take it to the Research Center or the Intraday Stock Chat, or take both 7-day free trials and get involved. I discussed last night in the technical analysis video how you had bullish consolidation above two moving averages with a 20 sloping up. That's a bullish signal right there. In addition, JP Morgan earnings weren't so great, so the bar was lowered. Citigroup earnings yesterday morning were not so great. The bar was lowered even more. As the earnings from the previous financial firms were not that great, Goldman had sold off, factoring in not so good earnings. They came out with solid earnings today. It wasn't spectacular, but it was solid. And that's enough to really catch a lot of the shorts, people that had shorted in expectations of them having bad earnings off guard. Short squeeze ensues, and you can see the stock up 7.25 today approximately. Great move on Goldman Sachs, guys. Take a look at the intraday chart here. I mean, this is just an unbelievable move. The stock actually opened flat, and when it didn't collapse, shorts just got their pants squeezed, and sure enough, a major boost up. All right, so keep an eye on that. Goldman Sachs leading the market. Once Goldman Sachs started to take off, all the rest of the financials followed. JP Morgan up $1.67, a monster move there. Citigroup, which was down pretty ugly yesterday, back up 68 cents. Wells Fargo, which actually had decent earnings yesterday, but fell back to the flat line, up today as well. And across the board, even BAC up 26 cents on the day. So again, the financials really are leading this market today. In addition, Apple Computer, which is up about $3.50, did hit a new 52-week high before pulling off those highs today. You can see, had made a new high here, pulled back, made a new high right there. And these are 52-week all-time highs. If I show you the daily chart, this was your previous pivot top. We actually pierced it last week, and then today you actually took it out just by a shade, by a very, very small shade. This is another call I had made to the Research Center members saying this was bullish consolidation on Apple's chart. It was going to break higher. Sure enough, you're seeing the results of that. So we've been nailing the calls on this market, folks. If you want swing trade alerts, if you want proprietary technical analysis, you come here to inthemoneystocks.com, take this 7-day free trial, and just start rocking it with the pros. I mean, we're here to help. We're here to give you trades. We're here to teach you the methodology that has been proven year after year for excessive profits to the point where you're beating every hedge fund manager out there. All right, I haven't heard of one hedge fund manager doing better than our results here at inthemoneystocks.com. So again, 7-day free trial. That should be all I need to say right there. All right, let's take a look at a couple other things here. What else is moving in this market? Amazon continues to have a very, very good day. This is another chart that I highlighted to my members, folks, in the technical analysis video section of the Research Center, which again is a 7-day free trial for that. And you could just see this move up and then bullish consolidation right here. See this consolidation right here along the 20 moving average? That's telling you it's going to go up. And sure enough, blast off central. Amazon's up over $8 today. Very easy to buy that consolidation. It also has a proprietary time count on it. And sure enough, bam, right there. All right, so again, very, very nice move. You actually are hitting resistance up here on Amazon.com. Nonetheless, great profits in the pocket for members that took that trade as well. I mean, there's just trades galore. Doesn't matter what the market's doing. We're going to be on the right side based on price pattern and timing factors. And we're here to essentially maximize profits in any market. I don't care what type of market it is. You're here to maximize profits. And they will be had. Now, a sector that's having a big day today is the solar sector, especially Chinese solar is having a big move. Take a look at STP, up 47 cents to $3.68. Look at the consolidation there. CSIQ is one of my favorites. I'm actually in this trade right now myself on an intraday basis. I bought in at 342. I put the alert out on Twitter. In fact, you can always follow me there. Plus on the Traders Life 24/7, which is our personal social network for our members here at InTheMoneyStocks.com. And I'm up about 6 cents right now. I'm looking for a move above 350. It's going to do it. It's already trading at 349 by 348 or so, right around this area. But again, look at the consolidation pullback there. What else? SOL is another good one. Look at SOL making a breakup. These Chinese solars have been very hot lately. Look at JASO, JA Solar, breaking up as well off the consolidation. So it's a thing of beauty here, and if you can read the charts and you can find the sympathy plays, there's plenty of movement and profits to be had. Another trade that hit target today, I want to highlight this one because I think it's an awesome one. SMSI, I gave this out to our members in the beginning of the new year, on the first trading day of the new year at a price of $1.17. Today it hit the second target of $2.05 for a 75% return. That's right, folks, 75% return. Members just rocking it. Another chart that I gave out and a stock I gave out at $1.01 was HIMX. Right at the beginning of the year, based on a January effect, based on what it was looking like. It was going to have a big move. Look at this chart. Wouldn't you have liked to have been in with our members down here? I think so. At $1.01 in, it's now trading at $1.40, a 40% return in about 2 weeks on this one. 75% on SMSI. And there are other ones that I'm going to be putting out. They're there for the taking, guys. If you read the charts, if you use the proprietary, this is methodology that we have come up with over years of study. Hedge funds don't have this. Institutions don't have this. We give it out to our elite members here. You join, you learn it. You take the methodology webinar, you buy the DVD, you get this stuff. We teach it to you in all those things, including in the Research Center. And you start profiting like you always should in life. The key is to make 2012 the year you turn the corner. Stop listening to the hype on Wall Street. Stop listening to that nonsense and start just making money. It's all about dollars and cents, folks. If you're not making money, you're doing something wrong. Get over here. Start doing something right for once. Take care, guys. I'm going to get back to trading. I got to make some good money this afternoon. Come join us here. Remember, 7-day free trial. Try us out. Take care.